Hello and welcome to FX Acrobatics. I am the Acrobat and today we'll be doing a weekly forecast again. However, we need to start by looking at last week's results because we had some predictions last week. So as you can see, last week we predicted that the dollar index will move about 834 points, 810 maybe pips. I'm not so familiar with the scale if it's accurate for the dollar index, but as you can see, our target was here. Now we have the war between Russia and Ukraine, which is very unfortunate. Our prayers are with the Ukrainians. Please stay safe. I know the unrest can be very, very hard and destroys dreams and hopes. However, that's not the topic of this. I'm just bringing it up because the market was heavily affected by this. And the important thing is that we were targeting this here. We wanted price to come all the way here. Now, it doesn't really matter if there's a war or whatever, or some high impact news. The market will still go where it was supposed to go. It's just that such events will provide a very high level of volatility. Okay, so let's see here. As you can see, the market still went to where we said it was gonna go, but due to what happened on Thursday at Ukraine, there was this high volatility and this overshooting of the target. So the market was eventually gonna get there, to take out liquidity, but this event just made sure that this is faster, so it kind of moved twice the target that we were hoping for last week, which is still fine. Our directional bias is still correct, and if we were taking trades, they still would have come to fruition. So that's the dollar index right there. Moved twice what we expected. And then the euro, we're expecting it to come down here to this imbalance, and as you can see, it actually went there. There's something interesting that you need to note here. After liquidity was taken down here and this unusual movement occurred, price actually went back and closed where we wanted it to close, somewhere around there, this imbalance. So you can see that this was just a stop run. It's also true for the pound. We had predicted that it would move 216 pips to take liquidity down here, and it did, but it did the overshooting due to the war. But look at where it closed, just below the borders of this candles. So everything still went to where we wanted it to go, with just a little bit of a push. Now let's not waste a lot of time. We need to cover quite a lot. Okay, Bitcoin still in that consolidation. This is where it was in that second stage distribution, and you can see that last week, because this is the weekly chart, right? Look at that. So this is the weekly chart, and you can see that Bitcoin actually went down here and still in this range, in this consolidation, which is still second stage distribution. So our target has not changed for Bitcoin. We just continue with last week's analysis and still expecting price to move lower and take out liquidity somewhere here at the price of around 28,000 US dollars. So we did say that Bitcoin is following the ICT market maker sell model. It's the original consolidation, accumulation, smart money reversal, it's low risk sell here, first stage distribution, second stage distribution, and we need to complete the market maker sell model by taking out the liquidity below the original consolidation. All right, so this is the economic calendar for the upcoming week. Yeah, so it is heavily packed with high impact news, and The most important one is down here, non-farm payroll, and usually you would expect this to be a little bit of a consolidation week because the major movement is expected down there with non-farm payroll. However, on Wednesday there's this news event here, OPEC JMMC meetings. These meetings are about oil, from the 13 nations with the most oil. So they'll be meeting and making up some decisions about oil. So this could cause the market to move probably a lot and really move even before non-farm payroll. So if this wasn't there, I would really look at this market to be stagnant for the most part of the week. But now we have the war in Ukraine and we have this, and then we also have non-farm payroll. There could be a lot of movement this week. Now, the news that I've boxed in here are in our kill zones. I'm preparing a video on time and price theory, so you'll understand why these are boxed in and these high impact news here have been left out. They are still in a kill zone, however not the ones that we like to trade. For example, this Australian dollar news will take place during the Asian range, so we have strategies for those, but right now we just want to focus on the London kill zone and the New York kill zone. So this one and these, they fall inside the kill zones of interest, so that's why I've circled those. All right, this is the dollar index. We're looking at the daily chart here. We want to try and predict what will happen. Okay, so just quickly, I'm gonna be doing this live on TradingView. I'll just switch quickly to the monthly chart, so that we can see where we are. Now we just want to see where this market is most likely to go. We are just testing out probabilities here. We're not saying with absolution. All right, so as we know, we've been looking at this chart for weeks now, the monthly chart, and you can see the dealing range from this high to this low. We have our equilibrium here, and this is premium, this is discount below this line. So now you can see what has happened here. We have come down to this buy side imbalance right here. So that buy side imbalance, we dipped into it, the dollar index, and after that had happened, we went up, and now we have taken liquidity above this high inside this bearish breaker. Now this is a bearish breaker. If the dollar was gonna go down after getting inside here, we should have seen it come down and completely rebalance here, rebalance this buy side imbalance, and then move lower. There's this order block here, this bullish order block. It could have come down here to maybe retest it and then go up, or completely obliterate this kind of resistance here, but it doesn't seem like it wants to do that. So because we have had that hard rejection here and we keep on going higher and higher, to me it looks like it really wants to get above this breaker. If it does that, then it will most likely continue higher. So that's the weekly chart of the dollar. Okay, sorry, that's the monthly chart. I'm sorry. So now quickly let's look at the weekly chart and see what that has for us. So right now we are still bullish on dollar on the monthly chart. Let's look at the weekly chart, put on some annotations. All right, so what are we seeing here? Okay, same thing here. We have this bearish order block on the weekly here, and price came in to it, tested it and it broke it. If you look at this, let me just put on, you see here the crosshair. If I place this at the crosshair, you can see that this candle, the last candle here, it closed above that bearish order block. If you look at the high, it is at 97.735 and the high here is 97.717. on the other side we have 735. So this candle is higher, sorry, this candle closed higher than this candle here. So this order block has been completely violated now. Yes, we had that rejection because as much as this is the case, we still have the breaker here. So that breaker provided some kind of resistance and push price lower. But you can see here we keep on making lower highs. We are finding support at this order block here. This is a bullish order block. So we are bullish on the dollar weekly chart. So our objective on the weekly day still remains there. So we're still looking for an upside. All right, let's move on to the daily chart. Put on some annotations on the daily chart. All right, as you can see, as I said, we are very bullish on the dollar right now. You can see here it took out some liquidity, relative equals highs, so we did a page and revert. So page liquidity and revert, went down, retest this order block here, see that, that's a bullish order block, tested it, went back here, volume imbalance, retest, rebalanced, went all the way up, created an imbalance here. So now we've come down, but we did not dip completely into this volume imbalance, and we might not, because this is looking to me like a balanced price range. Yeah, so it might just dip a little bit in here tomorrow and then start moving up. If it does not do that, if it goes down to completely close this, then I'll be looking for a downside and start to look at these higher lows as a low resistance liquidity run signature. But for now, we'll see what Monday brings. If we close this completely, then we might have to change our idea. But if it doesn't, then it's allowed to go down a little bit inside, but not completely close that. So then we can see it go above this. This is a stop run, so we can just ignore this candle here, this wick. We can ignore it, treat it as if it's not there. If we do that, then we'll be looking for this upside on the daily chart. Okay, so I have not labeled the 4-hour annotations, but as you know, this is an order block, bullish order block. This is a buy side imbalance or a fair value gap. And as you can see, we've come down to this one, but we did not completely get in. So I'm expecting it to at least come deep into it a little bit and then move up. This is a bearish order block, so it's gonna be interesting to see if price wants to go in or decide to go down, or go down in here to go up. There's that dynamic. So yeah, let's see what happens. Because we have non-farm payroll, I would expect it to, if it were a normal week with not so many high impact news, we would expect it to just keep digging in here and into the order block, into the fair value gap, into the order block, into the fair value gap until Friday, and we see non-farm payroll finally make that decision, maybe to go and take out buy side liquidity, relative equal highs there. All right, let's move on to the euro. This is the daily chart. Already, you know, we are bearish on if we are bullish on the dollar, so we're already bearish on the euro. So I don't want to go to the weekly and monthly chart, so I'll just show the PD arrays for this one. Okay, so this is the daily chart for the euro, and we have this bearish order block since we're already bearish on the euro on the hard time frame. So we have this order block. It's also inside another order block here, so we'll want to see if price will want to come inside here. As you can see, it was rejected after taking out liquidity here. It's the stop run, took liquidity, was rejected, went all the way up here, but did not get inside the order block. So I would like to see it come down, come inside here, and then maybe I can take a short here to attack sell side here and then here. As I said, this is a stop run, so you can ignore the wick here and just treat it as if it's not there, and then you can see that there's liquidity here and here. All right, let's look at the 4-hour PD arrays. Okay, so as you can see, we have this area here, so we might expect it to, because this is now inside that daily order block that I was talking about. If I can just put that in there, you see it's inside that daily order block. So that's why if it comes in here, because price is fractal, so it might go as far as inside this on the 4-hour, or just touch that. Yeah, okay, so that's what we're expecting, for it to just move a little bit in here. Maybe you can then take the short there on a demo, of course, on a demo account, and then attack sell side liquidity down there. Okay, so that's the euro. Let's look at the pound quickly. Same thing, we are bearish on the pound on the high time frame, so let's not go to the weekly charts and monthly charts. So I'll just show the daily PD arrays, and you can see same thing with the euro. For the pound, who went down, there's a breaker here. See, there's a breaker here, but inside that breaker we have this imbalance. If you go back to the videos that we've been producing on the weekly forecast, you can actually see that these structures were drawn a while back, and they've provided support here, and that rejection is now coming into this. We created an imbalance. Once this candle closed, we created an imbalance here, which might be tested tomorrow in here and probably attack sell side. If you ignore the wick here, we have relative equal lows here, so we might take that. So yeah, that's the daily chart for the pound. So let's look at the 4-hour and conclude. All right, 4-hour, not too much. As you can see, there's an imbalance there, the one I was talking about. If you use that price is fractal, you can see that that is inside a daily imbalance. Both of these, they're inside a daily imbalance, so we will expect a hard resistance here to then send price lower. Okay, as usual, once we have made all of these predictions, we need to have some kind of confirmation. So we need to look if there's something like SMT Divergence that is telling us that we're on the right path. So let's look at SMT Divergence. On the hourly chart, you can see that here on the 25th of February, the dollar, you see here, the dollar made a low here, and then has since moved lower when we closed here on Friday. The euro, as expected, here has a high, has moved higher, so it matches that mirroring of the dollar. Now we'd expect the pound to do the same. However, it has not done that. It has moved lower instead. So it is not willing to go up. So if that's the case, we look at that this is a stop run. So we're expecting lower prices. This is just a stop run. It's only going up to go down, take some liquidity and then go down. This is heavy, it doesn't want to go up. So it's giving us a hint that it wants to go down. If that's the case, then the dollar is also doing a stop run. It's gonna go up. There's further evidence for this. It's not that I'm just cherry picking things that are going to work for me here. If you look closely here, you see from here, somewhere here, let me just say whether it's this one, I'm not so sure. See that the dollar has not made a low here from this point to this one. The euro from the same point, I think it's this, has gone higher. Now the pound from the same point, is the point of origin right here, has gone lower. So that's another level of SMT divergence. You see this moving lower, this one, oh sorry, choose the point of origin here. You see from here it has gone higher. This one has not made a comparable low to this high. This one is not willing to go up. This one is heavy. This one doesn't want to go down. It's strong. This one is just making a stop run. So this is our confirmation that we should be expecting lower prices on the foreign currencies, the pound, the euro, and we're expecting higher for the dollar. For me, maybe tomorrow I'd be looking at it to just dip a little bit and then take out this all the way up and work those levels. Yeah, this is it. Bitcoin, we've already talked about Bitcoin at the beginning of this video. So I'm preparing some videos on time and price theory, journaling your trades, and there's going to be an indicator video as well that I'm going to be coding. It's a strategy. I just want to show you how you can actually code your own strategy on PineScript TradingView to try and automate some of the things. It is not a smart money strategy. It's we'll build up to those. I just want us to start from the things that are common and then get to the more advanced stuff of trading, which is ICT. So yeah guys, I hope you have seen that all of our predictions in the past few weeks since this channel started, that we've been spot on. You can go back and confirm. I post the videos, I do the analysis beforehand, and the week just performs the way that I've said. I'm not saying that I'm good at this. I'm still learning. I'm also amazed at the concepts. There will be a time where I'll get it wrong, so please do not think that I'm saying I'm always right. I'm just looking at the probabilities and they seem to align. So if we do this more and more times together, we will learn, and that is why I want to make the video on the journaling, so that we can journal our predictions. I'll show you what we can use to do that, and then we can correct our mistakes, and then hopefully we will find the way of trading together. And I believe that if we bring all these things together, you will actually see that this is the way.